Retirement is supposed to be a time of freedom, and that's great. One thing that doesn't change, though, is you're never free of taxation. In fact, many retirees find themselves in a higher tax bracket. My guest, Jeff Gollehon in Aberdeen, North Carolina. Good to see you again, Jeff. So talk about this problem where a retiree finds themselves in a higher tax bracket, which can be surprising. How does that happen, and how do you handle that?
Well, how it happens is, when somebody retires, they have a pension. Maybe they just started taking their Social Security. Maybe they got an IRA withdrawal, a 401k withdrawal, some other investments they've had along the way. They're starting to take income from. It piles up, and all of a sudden, and on top of that, maybe they can't itemize in their tax return anymore. So they've got more income with less deductions, and all of a sudden, they're not working anymore, and they're paying more tax than they were before. So, how you fix that is that you try to manage their income to generate more income from tax advantaged places. And there's lots of creative ways we can do that nowadays, where we can, we have clients that are making $60,000, $70,000 a year in income and paying no income tax. And so there are ways to plan around that and kind of engineer that income to minimize taxes.
So one popular tax mitigation strategy is the Roth conversion. How do you know if that's the right thing to do?
Well, it really comes down to, first of all, what the makeup of a person's portfolio is. The IRAs are always going to be taxable when the money comes out. However, what other income do they have what kind of tax bracket are they going to be in, number one. And number two, in their situation, are their tax brackets going to go up or down in the future? Can they psychologically handle having to write large checks to the government every year when they're making those conversions? So there's a lot involved in deciding when it's right and when it's not right, and we have the tools to determine when it is right and when it's not.
Well, finally, can you talk about how you can use life insurance to actually create a tax-advantaged income stream in retirement?
Well, basically, life insurance is one of the last great tax dodges left, and by utilizing some of the strategies today, where we can kind of overfund a life insurance policy with money, just like putting money into the bank, and it's all about controlling costs, and the more costs we can control, which we're able to do now that maybe we couldn't do 5 or 10 years ago, we can generate a lifetime income that's tax advantaged or tax free, simply by being a little more creative.
That's Jeff Gollehon in Aberdeen, North Carolina, and you're watching Retirement News Online.